know, a little bit later than expected. Sorry for that. But, you know, when the markets are crashing, then you have to trade a little bit. And let's put the studio to the red because, yeah, everything seems to sell off. I hate to say it, but, you know, I told you that there's still the bear market going on. And you see it every single day. You see those rallies, and then you will see the sell-off. And I still convinced that the lows of January will be tested again, guys, okay? And I personally hope that we see space at $6 again, okay? Because you know what I'm doing then? I'm selling everything else. I still have a little bit of other positions, and we'll go all in on space. So let me know in the comments in the live chat where you are watching from. We have people from Waikiki Beach in Hawaii. We have Indiana, USA, the new Paris. Okay, interesting. We have Stamford, we have Sydney, Canada, we have Vilvoorde in Belgium, and we have West Lafayette in USA. And I want to start today with a video of Cathie Wood, okay? Because as you know, she's like the queen of growth stocks, and I would like to, you know, hear what she says to the current situation, because to her, this current situation is even worse, right? Because, I mean, her fund lost so much money, guys, okay? So much money. And we'll see what she says. She was quickly on CNBC, and let's before we diving in, let's have a look what her fund is actually doing. Markets are heavily selling off here now. S&P 500 at minus 1.76%, space minus 10%, fighting with the $9 mark. Yeah, so let's have a look what she's saying after she fixed her hair. Let's go.
You know, the criticism is rife right now. Your stock picking prowess, as I said, your research, which you are defending multiple times here. I'm wondering what you make of the criticism, whether you think it's gotten too personal, the fact that there is literally now an ETF betting against you. What do you make of that?
Well, I find that very interesting, especially the last. When you think about it, it's simply a call. Well, they're shorting innovation, and that seems to me over time that's not going to be a business. If you ask me, consider the source. But they're also not doing any research. They're simply shorting innovation. If they were doing research and could point us to reasons why what we have included in our portfolio is not going to participate in the new world order, then we might have a conversation about it. But the idea of shorting innovation in America is ridiculous, I think. But here's what I do know. When I see, and this is investor psychology, when I see people so sure that we are wrong, and that they are willing to set up companies simply to short innovation, and to set up funds to short innovation, you know that investor psychology, the pendulum, has swung so far in one direction that if we're right, then the rewards are going to be enormous.
I don't know how else to say it. They're not shorting innovation; they're shorting you.
Well, we stand for innovation. You know, if it's an interesting, another interesting idea that surfaces as you say that. I again was in the bubble, but I was in the markets in the 80s and 90s. And where did investors go to access exposure to innovation? They went to the NASDAQ. And you know, I'm looking, and we're benchmark agnostic. Our goal is to deliver a minimum of 15% compound annual rate of return over a 5-year period. So we're benchmark agnostic, and until recently, I just didn't know how the NASDAQ had evolved. So if I look at the NASDAQ 100, what do I see? I'm shocked to see in there, if you look at the overlap with our portfolios, and not just the flagship, I'm talking about all of our portfolios, the specialized ones, only 25% in the NASDAQ 100. The top 50% are the FANGs, Tesla, NVIDIA, Microsoft, roughly. That's very rough. And that's why you see so many top 10 portfolios, top 10 stocks in portfolios out there to be those. And then if you look further, you see food stocks. Like, this is not the NASDAQ I grew up with. You see like Kraft Heinz or Pepsi. You see Old Dominion in trucking. You see a CSX in rail. You see Dollar Tree and other dollar stores. You see a lot of bricks and mortar retail. And now it's that ilk of stock is roughly 10%. So what's left is what we would call either companies going to be disrupted by innovation, or they're involved in sustained innovation. So this is not the true innovation index anymore.
Yeah, so you see a couple of issues. First, let's see her performance. She believes, as you have seen from the text effects that CNBC put in, the market's still going down. As we started the live stream, it was 1.76. Now it's 1.82. The space is still 10% down, fighting here with the $9. But if you're looking into ARK Innovation Fund, you see this unbelievable sell-off since basically November, right? November we had still 124. Now we are at 70, so almost lost 50%, which is tragic as well, right? I mean, this was such a great concept, but it also works when money is cheap and there is just this new wave of innovation. Now the wave cools a little bit off, everything is settled, and now people understand, okay, maybe this valuation at Zoom or Teladoc or Peloton is not the right one, okay? Even though they have a great growth in front of them, still it's not like 10 20x in 2 years, okay? This was a very special situation after the pandemic, and people bought in, and the story and the timing was perfect, but it won't persist for a longer time, of course, okay? So you can see here that nothing is certain into those markets. And even we have on Monday, we have a long weekend, guys, okay? The stock market in the US, the stock market cannot be closed longer than 3 days. And I think on Monday is Presidential Day, if I'm not missing. So you will see that the stock market will be closed, and we will have off Saturday, Sunday, Monday, and Tuesday it has to open because it's basically rules of the United States of America, 3 days in a row maximum for the stock market. Now, you can see here that Virgin Galactic is actually selling off quite a lot. Let's have a look if we already sold off everything which we gained. Not really. So if we are reaching $8.18, then we would lose everything what we gained. But yeah, it's something that we know already from the stock, right? But look at, it's not only Virgin Galactic, obviously, it's Peloton, 14% almost. Nikola, Neo, everything is going down, and DraftKings is also 22.4. So yeah, it's the everything sell-off. Okay, tomorrow you will have the last day, and guess what? We have a long weekend. And we don't know what's the geopolitical situation. Who will hold into the weekend, into the long weekend? Nobody that has the chance and that's trading is holding into this long weekend, okay? No way. So I think the sell-off will continue tomorrow as well. Today we could close maybe even 2% down on the S&P 500. Then comes again the statistic, one of my favorite statistics. If the S&P 500 is down 2% or more, the next day is green in 90% of the cases. So, but that's just statistic, right? Yeah, so there's another small video about Cathie Woods where she thinks that, the inflation is just because of the current supply chain issues and so on. There was also some very interesting, takes from Charlie Munger. So that's something that you could also, look for yourself. Those are some small bits that were nice content here in the financial industry and financial TV. Also, shout out to 2 members, guys, Mantas from Vilnius and Rob from Indiana. Thank you very much. And then also there's Ohio and New Mexico and Sebastian from Wakanda. So, smash that like button, guys. This would be highly appreciated as always. Make sure to follow me on Instagram as well, Wolf of Dubai Danny, and I see you basically tomorrow for Virgin Galactic Fridays and so much more. So stay tuned and take care.